Hey, Jack. Good to see you, my man.
Link to join. It's always something.
Always something, always something.
So you got Tesla up here. What are you doing with Tesla, my man?
Hey, I was just talking about the trade we talked about last Friday is working out right here for everybody. The one we talked about right here on the show.
Oh,
It's
wow.
up. It's
Look,
up.
it's perfect.
Yeah. So if anybody took the trade last week that we talked about, that we broke down, that debit spread should be in the profit right now.
Yep. Nice move.
Should.
So how much does Tesla have to move usually for a debit spread to pay off?
That's gonna be a question for you, Jack. You're the one with the system that loves this thing.
Well,
Um,
I see people say, hey, all we need is a 1 to 2% move in certain stocks. And uh, yeah, I think that you can get that in Tesla, but can you get that in a lot of other stuff?
yeah, see, we were right here last Friday over here, and we kind of took, well, let's see, no, right here, 14th, right here. We were right here last Friday. We were here the Friday before that, and we're right here this Friday. So if you didn't catch that little bump right there earlier this week, it was underwater, but now coming back up to profit right there.
Yeah, so that's funny. You show that. We had a lot of people ask when you got a trade down like that, like it was yesterday, what do you do? Do you close it out or do you ride it out? I like to ride it out. I always want to think that maybe it didn't do it by Thursday, but maybe it'll do it by Friday. Do you stay in these things till expiration or do you bail when you had a yesterday like that?
Hey, I tend to just, full risk when I go in, it can go to zero. I don't like to close early because you never know. Catch a Hail Mary last minute. I
Yeah,
already decided the risk going in, like I'm going to risk, whatever it is, whether it's 500 bucks or 100 bucks or whatever, whatever it is, I
right.
size it. So if it goes to zero, I can sleep. And I'm getting in high probability trades anyway, so more often than not, I'm going to win.
Right.
And I mean, I've got the track records on a lot of stuff to I win a lot, so I tend to sleep like a baby. I just
Yeah,
don't people that sweat it are over risking, I feel like.
I
If
agree. I agree. But the point I'm making here is I think it pays to stay in a trade and stick with a system. And if you got a one bad day like yesterday, that doesn't mean the trade is ruined or the system is no good. It just pays to stay with it all the way. We had a lot of people ask about a trade yesterday we had in a Tesla payout program, and we told everybody. Everybody asked, "Should we get out?" I just said, "No, let it cook." And here we
yeah,
are.
I mean, yeah, we were talking about, I think when we were live last week, it was right at that 328 price right there. So we were talking about a 328, being one in the money, one out of the money. And right now it's at 335. So you'd be fully, you'd be- yeah. I think, we were talking about like a 325, 330 maybe.
Yeah.
So
Robinson
that,
says going in is easier than when to get out. That's true, Robinson. We give you the exact options to use everything. Getting out, though, just remember the best part about trading is taking a profit. So if you have one and you're a little early on it, you could take the profit. But don't give up on these things, when you don't have to. Will says Tesla, amazing recovery on the last day. Whew. Yeah.
yeah, shoot, I like that all except the shrew. I mean, yeah, great. It's great to win, but I wasn't sweating it at all. I actually took it on Thursday, Jack, without knowing whether your signal fired off or not. I took it on Thursday, and I'm actually out today for profit. So, um,
That's how you should do it, my man. That's a beautiful trade. I'll show you. Let's take a look at my AVGO trade for a second.
yeah, let's talk.
Now,
Let's
were
talk
you
about it.
when everybody said, what are you going to do about it when it was really close, right?
Look at that today.
See,
And there we were.
that's what I was talking about. Well, yeah, I did nothing because I think the options were going to expire out of the money by Friday, and that's kind of what we had. So I'm loving this one. Yeah, I'm out the 285 strike put, and I bought the 282.50.
And we
Made
talked about this on Wednesday.
Yeah, I put that trade on Tuesday, which I always do on Tuesday, and Yeah, that drop was nothing, you know. It says I'm reading that AVGO dropped 7.5% in a recent market pullback, reflecting a wider trend of losses, blah, blah, blah. This stuff's all going higher. Whenever it goes a little lower,
Wow.
it'll last.
Yeah,
Steve,
that's the beauty of these high conviction stocks that are making new 52-week highs and in uptrends. The pullbacks are usually limited, and then
yes.
we keep rocking.
I read an interesting story, uh, article one time that talked about the statistics of buying a stock after it hit a new 52-week high, buying it after its first pullback after that is usually a golden trade. I don't know. I haven't looked at all the stats on that, but I kind of go with that. Yeah, look at that. That's worth nothing. Isn't that
Like two
funny?
cents. Went from being people sweating it yesterday. If you're watching it, I don't even watch them, Jack. It's like you said, you just go fishing and go ride, trail riding, and
Yeah.
that
I know how it's going to work out. You know, I know how it's going to work out based on the stats and the probability. So if it doesn't always go my way. You know, 4% of the time I might not be right, but I can live with that. And it does allow me to have a free life. You know, I used to sit in front of the computer all day, stared at it all day in a windowless office. And I was younger with my fund and all that stuff. And now it's not me. I look at the market in the morning and I go out and live my day. I check it around quarter till two. And if I got to make a move, I come back to the cabin and do something. But man, put these trades on and live your life. This is a great market to trade, but don't let it consume you. I see too many guys making too many trades and, you know, overwhelmed at what they're doing.
look at that. We talked about Gap at 20 on Wednesday,
Yeah.
2160 right now.
Now, did you ever get that stock put to you?
Not yet. I actually I didn't tell you, but I actually sold last Friday a 2050. I thought I was gonna get put this week, but no, here we go. This 2150.
Yeah.
I actually I was gonna bring up my Robinhood brokerage account. Let me see if I can do that really quick and show you this trade
So
I got into.
Gap's going to go over 22 here. Not today, but
Let me see if I can actually log in here. You'll probably want me to get on my phone to authorize it.
yeah.
Let's see. Yep. Please log into your phone and accept the notification. Yes, it's me.
Mine's in the truck, so I couldn't get my phone for that.
All this two-factor authentication stuff. Let's see.
It's a lot to take care of, man. Will says he got in late on Wednesday, got a 38-cent net credit, but at a lower strike. That's cool, Will. Way to go. That's a nice yield. 38 cents on $2.50.
Huh.
That's
It's not
good.
gonna let me. Not gonna let me bring it up. Anyway, I sold that 2050 last Friday for like 60 cents a contract. I think it was, and that's that's getting pretty spicy there. Should be closing out any time.
Dennis asks, Jack, those credit spreads, do you go way out OTM? Yes, I do when I put it on. Do you look at a percentage amount where you think the stock will go? I don't look at a percentage amount. I use something similar to what Jeffrey has here with EMAs. I've got three of them. I use the 23 to EMA 54 and 208. And I just look at where is that support relative to where the stock is. And then I want to try to create my spread out of the money just below that support if possible.
Now look at this. Next week, Gap has some earnings coming up. But
What do
look at
you
the
like?
premiums. Look at the premiums on here. It's pretty
That's
spicy.
is spicy. Now, what kind of earnings could they have? I don't even know. I haven't been to a mall since 1982. They still sell jeans in the mall, and where's their revenue coming from? Jeans?
Well, they have, they have Gap is their main brand, but they also have Banana Republic, which has been, it's more of a slightly kind of discount retailer, and they're usually in strip malls, not in actual malls. There's one next to my grocery store that I haven't been in a couple of years, but my wife goes and buys me underwear every holiday.
There you go.
So yeah, they have had pretty good earnings.
You get your undies from Gap?
I get them from Banana Republic.
It's even better.
Hey, buy the cheap ones, you know.
The only
They always
ones,
buy.
the ones called Two Under. Google those later. Those are the best underwear in the world.
They
Those,
always buy me ones with like hot dogs or burritos or cats or something on them.
oh, it's the material and the construction. You want that moisture wicking down in your nether regions, right? In a
Uh,
hot summer day.
yeah, it's funny enough. I love the feel of good old cotton.
Yeah, I do too. But those two unders are where it's at.
So Gap's hanging in here pretty well, and it might very well pop on earnings. It's got the
So
setup for it technically,
could they have a
and
surprise?
let's see what we're expecting here. We're expecting 54 cents on the earnings and a 3.7 billion dollars of revenue.
Do you ever look at the market maker move, how it's priced in on the options?
Yeah, we can
The
do
bar
that.
chart shows you how good, bad, or ugly the stock can go.
Well, I usually do a poor man's way of doing it. For those that don't know, you can come in here at the money. Jack, I don't know if you've ever do this.
I
You
do.
come in here
Let's
at the
call it,
money.
we're calculating an expected move here, folks, just so you know. Sorry, buddy, go
You know,
ahead.
yeah, we're right at 22. Just shy. So this will be close, but not perfect. Perfect would be if it was sitting right on a strike. Now at the money, I'm gonna go with the 22 since it's slightly closer to that. You come in here, you sell both sides, and we're gonna sell that side, sell the call and the put. So it's 114 or $1.14 plus $1.55. So right now the expected move is roughly $2.70, 269. And that'll be up and down. So 269 up and 269 down. That kind of sets your range here.
269 on the upside puts you at 23 and change. Man, if you got put that stock at 2050, you'd be gifted the stock, right? But probably won't get that.
Yeah, probably not getting that today unless something crazy happens this afternoon. Trump is speaking in 15 minutes, so you never know what's going to
I
happen.
tell you, man, I was just thinking this morning, I've never seen a president in my 40 years in the market have such an effect on the stock market on a day-to-day basis, just what he says or tweets. It,
Every day he can do this every day. He can have some sort of effect. It's crazy. And he did that the first 4 years too. So it's
yeah, he
just
loves to get on that social media, man, and loves to rattle the world every day. Sometimes I think he's just sitting there at 1 in the morning going, how can I piss off Europe this morning? What can I because he
he
knows everybody's going to read it and react to what he says. Like, I don't think Biden ever did that, but he was probably asleep the last 4 years. So who knows?
well, I mean, Trump, look at how he came to power, so to speak. Um, he came up as the number one show on NBC with his apprentice. Like he gravitated into that social media presence and just built himself larger than life. And he just feeds on that. I feel like he
Yeah,
feeds on that chaos and that
loves it.
um, and just loves it and feeds off of it. And I even talk show hosts go and meet with him in person. And they're like, okay, the one you see on social media is not the person that you actually go sit down with in the White House. He's actually presenting a public character that's different than actually who he is. But he loves that stuff and he puts on the show every day.
Yeah. Yeah. Different world we're living in now. Hey, I got to just ask people out there, we like to do these crazy polls sometimes. How about
Yeah.
what do you think the odds are that Trump can manage a third term to actually have it go? Yes or no? What do you say?
I
Just
don't
does he get
I
a
don't
third
think it's gonna
shot?
happen.
Steve says no. All right, folks, chime in. Does he get a third shot? No. Jeffrey says no. Dave says age is against them. Oh, Michael Jack says only if a war. Wow. Now, knowing Trump, he would start a war to stay in 3 times, right?
Maybe,
Says
maybe.
no. Vance Don't know. Earl says no. Only if a war. And age is against him. But that war, that's a good one, Michael Jackson. His health will take him out. Hell no, says Joe. Yeah, I don't think he's getting a third term. I ask a guy that's I know close to him, and he won't say anything. I don't know how he could possibly do it, but he ain't ruling out anything.
Now, Jack, look at this one. This one's got earnings coming up. Urban Outfitters. It's on that
Yeah, that's
52
like
week high.
clothes, jeans.
Yeah, I mean they have stores like in downtown areas and they make fancy schmancy clothes, but look at this sitting in a 52
Now,
week high right here.
people are
52.
talking about they can't put food on the table. Some of these companies are marketing right to that crowd. Is cheap, affordable jeans still like that? It'd be difficult to see this thing have a surprise.
Yeah, but it's on that it did that consolidation, that breakout 52 week high run. The
Wow.
trend tends to be up for 6 to 12 months after doing this little consolidation and breakout here. It could have 3 to 8 months left to go to the upside to outperform the S&P. This caught my eye. And look at the premium on this baby is crazy. You can get all the way down here. I sold a 62 yesterday on this thing for a
Let
pretty
me see
good premium.
on
Let
the
me bring
chart.
up the premium.
Yeah, bring up the premium. The stock is at 70.
Yeah, we're sitting there at 76.56. I came all the way down here to 62
Dang,
and
that's cool, brother.
I was able to get 80 cents yesterday. And it's at
So
70.
you must not want this one. 66, you're saying?
I was at 62
62.
and got
Why are
80
you going up
cents.
to 62? I can't believe you got paid on that.
I got 80 cents credit all the way down here.
What did that work out on a cash basis?
It's going to
Yield?
make me 40% return on investment annualized.
Dang,
40%.
that's a good use of your money.
It is. And that's counting the whole entire, like, I'm not even getting a discount where I'll have to put up 20% of the money. I'm having to put up the whole chunk of money.
Still doesn't
Um,
matter. That's a great trade. And speaking of margin, we were talking about that the other day. Margin, whether it's 7% or 5% or 12%, should you take margin? People ask, well, if you have a strategy that's paying two, three times what margin cost you, it's absolutely worth doing it on margin. But you don't have to. This is still 40% cash, cash secured put. But just always remember that if you're borrowing that money at 12%, you're going to have to make an annual yield higher than that. All right,
yeah, and
which
just
expiration did you?
I was just gonna go through. This is next Friday's expiration. So I'm just gonna go through this for everybody. That's $80 using $6,200 in cash. That's a yield of 0.0129. So basically 1.29% return right there. We're out to the 29th. So today is the 22nd, but I did it yesterday. So that's 22nd, 23rd, 24th, 25th, 26th, 27th, 28th, 29th, 8 days. So we divide that 1.29 by 8 days, which gets us, basically 0.1%. And then multiply that by 365 days because that's how many days are in a year. That's actually a 58% return right there. According to this, my little calculator I had, I think didn't count every day of the week of the year, but
Beautiful.
58% return right there on the cash when you annualize it. And the
Nice.
thing is to find these opportunities and just keep your money rotating from the one to the next one to the next one.
And when it's not in a trade, you could put it into all the things we talked about last week, right?
And look how much downside protection I have on that trade, Jack.
That's why it's crazy. Why did you pick the 62?
Because I could get that 40-ish% return on. I like to hang out right around a 40% ROI. It tends to work for me. It gives me a lot of downside protection in case I'm wrong
So you
on what's going to happen through earnings.
Matt asks, you sold a naked put there, right?
Yeah, I sold the naked put there. Now let's look at the expected move on this baby. Just
Yeah.
to
Yeah.
We're sitting right in between strikes, so we could use either one. I mean, it's almost perfectly 60, 76.50. Let's just go with since we went above last time, let's go below this time. $4 here, 370 here. So $4 plus 370.
830.
That'd be 770, just shy of $8. So 770 down. Yeah, it could come get me. I mean, they're pricing it in.
I don't
But
see
that
that.
would be 70. That we'd be just down at 69. So I'm well on down that below that at 62.
What's the
So
beta on this little puppy?
let's take a look.
And how did you find this stock?
I have a little tool that I look for. It's actually running at 0.86. So this much premium on here for something that's at 0.686 beta.
Let's explain to Mr. A what is a naked put.
Yeah, so for me, I cash secure these. Naked put, cash secure put. It's kind of the same, in the same vein. You come on here, you have no stock, you have no options, you have no position whatsoever in Urban Outfitters. And I came in here and sold this 62 strike option right here. I collected 80 cents for it, which was $80 because each option represents 100 shares.
Let's tell A what happens when you sell a naked put. What do you have an obligation or do you have rights?
So when you buy an option, you have rights, but when you sell an option, you take on the obligation to purchase this stock at $62 a share.
So, Mr. A, consider Jeffrey got paid to make a promise, right? He got to pick the strike, he got to pick the expiration, and he says, hey, if this stock hits this price, then I'll pay for the stock. But I want to get paid for making that promise. That's one of the most beautiful business models in the world right there. All right, A. Glad you like it. I love this stuff. Why
And
not do a credit spread?
I could have, but I just if I get put that stock, if something crazy happens, it's likely to go higher again, and I'm going to make way more money on it going higher back to the new 52-week high than I would ever be able to make on a credit spread.
Right. Let's take a look at the 6-month chart on this little bugger.
Yeah, I mean, here we go. Like this is way longer than 6 months. Here's the 6-month chart, roughly starting back at the beginning of the year. We had a little dip, and then we've been on this run, and we're sitting just off of 52-week highs at 52-week high right up there at 80, and we're sitting at 76.58.
Wow. I like that trade, my friend. What if somebody wanted to take this today? Would you still say, hey, this is what you should do? Would you do it again?
I recommended people do it this morning. It is running up here. The higher it runs, the less credit's going to be at the 62. And to circle back, if you haven't been here in past episodes, this is my technical support resistance line. Price tends to come down and find support and bounce off of it. So my 62 is hanging out right at the bottom of that support line. So if price were to dip, I expect it to bounce there too. And 62, 63, wherever you can get the credit, that you'll have to make the right choice for you and your account. If you don't want to buy or own Urban Outfitters shares, don't do this trade.
Well, what if you did it, the naked put, and you wanted to get out?
So if you wanted to get out, you just put an order in to close. Just buy to close.
And you always do the break even, right? How do you calculate the break even on this thing?
So the break even on that would be 62 strike. Missed my drawing tool. 62 strike where I committed to buying the shares. 62, but then you subtract off the credit that you took in.
Mm-hmm.
So your actual risk would be 61.20 a share.
Now that's great, because if you got the stock put to you at 62, you could turn around and sell it at 62 because your cost is 61.20. That's why it's hard to lose on these guys. If you're doing this on a trend that's up, it's very, very difficult to lose. And if you did get the stock at 62, you could also sell a 62 strike price call and make good money. Now, Samir wants to see the exact trade. It's pretty simple. It's just sell to open that put, and that's it, right?
Yeah, I don't have a brokerage platform that's gonna, I tried to open up a platform and it rejected me. Apparently I triggered some security violation, but it's right here. You go on the chain, open up August 29th, scroll to the put side, 62. You could do 63 if you wanted to. And right now the premium on the 62 is higher than the 63 for some reason. But I sold that one right there and got 80 cents credit.
So you would, Samir, you would just load up your platform with the stock on the options chain, click on the strike on the put you want to sell. That'll bring it up in your live platform and just sell to open however many naked puts you want to sell. And that money's going to hit your account instantly.
What is the difference in premium on a naked or a credit spread? So
Way different.
so it's way different, and it changes the risk profile. So
Um,
if you were to buy something, you're gonna have to buy at the ask. I got 80 cents. I don't know what the credit on the next one down or the debit on the next one down was, but if I was trying to sell that 62 and then buy a 61 below it, I'm gonna spend a bunch of my credit
yeah,
buying that 61.
yep. So yeah. Now the credit spread is a completely different animal, Mr. A. What we're doing here almost every time is initiating a wheel strategy. And the very first move on a wheel strategy is to sell a naked put. That way, if you don't get it assigned to you, you do it again the next week or the next month. If you do get it assigned to you, you turn around and start selling covered calls and ride the thing up. Wheel strategy,
Now,
awesome. But if you did a
oh,
credit spread, that would just be in addition to the first move on the wheel.
yeah, a lot of people have trouble with this for some reason. It's back to the age-old market. Um, I don't know what you call it, saw, I guess. Buy low, sell high. 62 would be a really great deal for Urban Outfitters right now. Like if I could buy at 62, I'd be pretty happy. I'm expecting it to go up for another 3 to 6 months, 3 to 8 months, make new 52-week highs. My target's actually up at like 110 to 130, technically. I have, Jack can attest, I have this uncanny ability to kind of predict where price might actually go.
That stuff.
And my prediction is somewhere in this vicinity to top out. So if I got put at 62, I could potentially double my money if it actually goes up into the middle of this target range.
Very nice.
That would be a pretty darn good trade to double your money on something. And I'm going to get paid. I get paid if I take it at 62. I get paid if I don't take it at 62.
Now, when you look for a certain premium, you're saying you want 40% return. Dennis asks, is there a certain premium you like to receive?
Yeah,
40%?
I like to hunt around that 30 to 35 to 45% annualized rate of return when I'm hunting for that premium. And I like to get a little downside cushion if I can.
And Kathy asks, can you do a straddle?
I wouldn't,
I would.
because I don't know if Urban's even going to move.
Yeah, that's a lot, Kathy. That's a lot.
So what would be your case for doing a straddle, Kathy? Like, why do you think it's going to move? I mean, the market's pricing in a 770 move up or down, but what makes you think it's going to move? It might not move that much.
Now, yeah, while we're waiting on Kathy, Samir says, look at CONL. It was trading at 34.50. Now it was trading at 60 a month ago. So how would you set up a put credit spread or call seeing good premium? I wouldn't unless
First,
the stock was in a trend, right?
well, first off, this is a 2x leverage, and I do not trade options on leverage.
Me neither. Don't do it. That's see those Granite shares, any of those companies that are doing 2 times long, that's a derivative income fund, not a dividend income fund. And what happens is you might see a high yield when you look at these things, but the net asset value as you just said, it got cut in half. So you might make 120% yield a year, but you just lost 50% on your net asset value of your shares.
Yeah, I mean that when you play options on a derivative of something, you're already like a derivative of a underlying, possibly that's maybe a derivative of something else. You're getting pretty far out there. This is what blew up Lehman Brothers and caused the great financial crisis. And with a lot of these leverage ETFs, they're exactly what blew up in the great financial crisis, except now they're legalized and using your money to do it instead of it being in the background.
I'll tell you something else. These leverage funds, long or short, if we get a real crazy market, like a fast market, they won't be able to unwind this stuff 2 or 3 times out. You'll see that net asset value. That's how ETFs go out of business. People think they don't. They do. A company will close down an ETF, and that's been happening. And these leveraged ones, they're primed for a really bad net asset value collapse, and you won't be able to get that yield down. Yeah, downtrend. Yeah, so always remember everything we do here starts with a trend. It has to have the trend, right? It has to have it. No other way around it.
Yeah,
Then
this one has a trend of lower highs, which means it's in a downtrend. And if we go look at the underlying Coinbase, well, that's an opposite story here. So something's wrong with Connell.
something's wrong. What could be wrong? They can't sell enough calls against it because the ones they have haven't expired. Lower, right? It's a tricky game. The other thing is with these covered call funds, if this one is at, you can do better. You can do better. You don't have to get 120% yield and lose 50% on the value. There's great covered call strategies out there that'll do you way better than buying one of these YieldMax funds, like Misty. The yield is high, but the net asset value is getting killed. So I stay away
Yeah.
from things.
This is the YieldMax version, Connie, right here, that does option income. And look at this thing. Look at it.
Wow. So it went from 30 to 7. I don't care how much yield they're paying. What does the yield say that thing is paying, though, just by the way?
Yeah, let's scroll down here and take a look. Oops.
156%.
Yeah, 156.
That shouldn't say dividend yield. That should say derivative yield because you're not getting a dividend, right? That should be illegal to say that. A dividend is a share of the company's profits paid to a shareholder. That's not dividend yield, right? This is derivative yield. So people look at that and think dividend yield, wow, this must be doing great. Not doing great. It's the calls. Yeah.
And what they're doing though is to help make some of these dividends stay high in the face of the volatility on Coinbase. They're paying out some of the NAV, the net asset value, to cover the dividend and keep it juicy to get more people to invest in it. And they're eroding the fund's underlying value.
This could go to zero. And the hook here is if you look at YieldMax and some of these other companies, they just advertise triple digit yield. That's it. They don't tell you, what the risk here is or how they did it. It's very complex. They use synthetic options, use calls, leaps. It's risky, man. Trying to unwind this in a bad scenario would be impossible for any of them. I wouldn't be surprised to see YieldMax all go out of business. Title Trust, 9 yards.
Yeah, I mean, this is it's pretty wild right here. And Kathy, just to circle back, we were talking about selling the at the money call and selling the at the money put. In theory, take those prices to generate the expected move of the option or the expected move of the underlying with the options prices. So that's what we were talking about. We weren't actually talking about placing the trade, just looking at the cost of that trade to help you estimate the size move up or down. And it's kind of the poor man's way to do it. You can go subscribe to all sorts of data that's going to do way more math and bring in options models and this, that, and the other, and try to hone it down closer to the penny. But at the end of the day, it's going to move what it moves. And if you just have a wild guess what the options are pricing in, then, and you play outside of that range, then you're more than likely going to possibly make money.
Yeah. Always good to know the expected move when you're coming up with these things. So Dennis asked Jack, do you use certain stocks for spreads? I do. The stock has to have a beta over 1. It has to be trading in the same direction as the broad market with a little more volatility. And instead of trying to find a new stock every single week, I'll just go back to the well on my favorites if I can find it. I can almost always find a trade in AVGO and NVIDIA. If AVGO is trending down, I'll do a bear call spread. If it's trending up, I'll do bull put. But I like to go back to the well on AVGO, NVIDIA. What else? And the thing I like about that, Dennis, is the price of the stock doesn't matter with a credit spread. It matters with a naked put, but it does not matter with a credit spread because the only thing that matters there to determine your capital is the difference in strikes. So it's a completely different animal. But I like the naked put. I like them both because you get paid instantly. And I like getting paid.
And there was a question there from A about looking at Circle. There you go. It's a downtrend. And just in case nobody's heard me talk about this before, there's a psychological pattern that plays out in the market right here. And we see this over and over where you get people that are hope and then they have some optimism. Then they get belief that it's, then we're going to go tell all our friends, and you might see your Uber driver or maybe flight attendant tell you, start giving out stock tips, or maybe, the gutter installer, or your HVAC guy, be like, hey, I'm invested in XYZ. And, just got to tell as many people to go buy because it's going to go higher, right? It's back to that market psychology Jack and I talk about. Higher prices in the market, bring more people, attract more people. But then suddenly we get a pullback and everybody just needs it to cool off before we go higher again, right? But then it drops some more and you get anxiety, then you get denial, and then you start panicking and you're going to close it out. And then, you're going to get out before you lose all your money. I call this the bubble pattern, and it plays out over and over and over and over and over and over and over in the market. And to me, that's exactly what's playing out right here.
And then the story behind that, though, is, the right after an IPO, the insider lockup expires and the investors can sell their shares. And I think Circle announced a secondary offering already.
Probably, since it's higher than the IPO. Got to get that cash while it's still up here.
Yeah, let's sell more shares. We got ripped off when we did the IPO at 30. Let's do a secondary offering at 140. And what that'll do, it'll allow the guys that got in when it was still a private placement, it'll give them their first taste of liquidity. So these IPOs can be tricky like that. You got that faith and all that and the emotions that go with it, but then there's underlying things you don't see until you read about it, that the insiders are selling and, blah, blah, blah.
Yeah. A says he's worried because we talked about maybe a big correction coming. The market's due for a correction, but is it going to be today? Is it going to be tomorrow? Is it going to be next week? Is it going to be next month? How about next year?
Be long as long as it's long, right? Make hay while the sun.
Having an exit plan is the most important part. Like, where is going to be your ripcord moment? You jump out of the airplane, you don't just like, you jump out of the airplane, you're going to hit the ground, right? But where do you pull the ripcord to ease the landing? So it's, you got to have that level. Like, what's the level for you that says we're going to go down further? Is it 6,000 on S&P 500? I mean, if you're just going into this scared because we're going to have a big pullback, you're never going to make any money because you're never going to get in and never take opportunity. What Jack and I are talking about here is going after some of the strongest stocks that are probably going to hold up in the face of a pullback.
Yeah, this circle right there, what you see, that's no trend. There's no compelling reason There's no way to get the odds on your side. This is a no-go unless you're just totally speculating and buying a stock to wait to see what happens. But there's no setup in here. There's not enough data really.
And they're losing tons of money, even though they're a stable coin. It's supposed to have to buy treasuries and all this sort of stuff.
That even be. Right? How could they even lose money? I mean, think about it. They just issue you put $1 in to do something on the blockchain. They buy $1 worth of T-bill to stabilize your dollar, and they collect the interest off of that, and you don't. And what a great business that is. But how do you lose money?
Yeah, that's a good question, right?
Really,
I mean, I guess you got ongoing operations and servers and all that stuff and employees and
you look at Tether, there's a guy named Anthony Pompliano. Everybody should read this today. Why Tether is the best business, or could Tether be the best business in the world? And he goes on and writes this report about Tether, how they're making $100 million per employee. Is not a more profitable business out there. And when I look at what they're doing, so simple, and what Circle is doing, I don't know how these guys are losing money.
hey, takes all kinds, right? I mean,
But we'll see how this plays out. How about Carvana?
yeah, let's take a look at Carvana, CVNA.
And then BFLY.
Yeah, we can look at that in a second. This thing's been on a heck of a run here. And I'm not a big proponent of their business model. I'm not sure how it's going to long-term play out, but we're back at, scratching at all-time highs here.
Yep.
And
I got out. I'm no longer in Carvana.
it's gotten a little rich for me to touch. I tend to stay in the stuff that's between $50 and $150. Once they get over 150, it's a little big for my personal accounts right there.
Yep.
So
that's where a naked put is going to have an effect on you capital wise because of the price of the stock, but a credit spread would have no effect on regardless of the price of the stock.
I personally like to be able to take 100 shares to bail it out no matter what.
Yeah.
It's always like even playing credit spreads. One of the ways to exit is to take shares and recover it. So if you aren't able to buy 100 shares or shares in the quantity of the size that you're trading, then it eliminates that as an option of a way to bail out of a trade. So for me, I like to kind of stay in the lower mid-price stocks. I don't like to play under like 20 much at all because it's low liquidity and a lot of funds don't play there.
No,
So
institutions don't play under 25. Now, Stephen asks about IBIT, his favorite stock, and also one of mine. I
yeah,
still
I mean,
have a 65 naked put. I still have not been assigned. And
you're
now,
not going to get signed today so far, it looks like.
yeah, I think it expires today. I'll do another one Monday. I still want to get more of this. I got
I think
28.
I think on Wednesday when we were dipping, I sold some 64s slightly in the money, and those are going to go out. I sold them for Friday, like today. I think I got like $1 a piece for them.
This thing is printing money for people that are using uh, income trades. It's just printing money for you.
I
Covered
actually kind of wanted to get put this down here at this price.
Yeah, I got it. That's the irony of it. I got a 65 naked put, still riding. I would love to get it. And I sold the 73 strike price call against all my other stock. So here, I'm getting paid on this one. Great. The only thing that could make it better was be if it paid a dividend. But as far as price goes, as far as volatility goes, as far as options pricing goes, this is about as good as it gets.
I mean, the premium available on this one is smoking hot,
Now,
smoking hot.
even when it doesn't move, look, it hasn't moved, right? It's traded in a narrow range, but it's still the pricing in these calls is still and puts is ridiculous.
Yeah, I don't have I have that 100 shares we were talking about on Wednesday that I got, I got assigned on 1 out of 4 and have 100 shares that we talked about back here. And I sold one upside call already. And I didn't sell one this week because in that pullback there, I didn't like it. So if we pop a little bit, I'm probably going to sell an upside call against it, probably up to 72, 73 where Jack is. I sold the 69, got paid 38 cents and closed it for a penny. So kept 37 bucks on that and just
Yeah,
lowered my cost basis.
I'm pretty sure all my 73 strikes expire today. So how about
And this is,
UH? Amir wants to see.
yeah, this is where I had sold those 64.50s on July 25th and got paid 60 bucks.
But you only got
Forget,
to sign one. Isn't that strange? Like Dennis is asking, just to sign one? That
yeah.
is weird to me.
And it was in the money. It was in the money. And I only got assigned on one. Somebody wanted to keep those shares.
Yeah, crazy.
So you don't always get assigned if you're in the money. Don't always get assigned. All right. What are we going to look at next?
We're going to look at
UNH.
UH for a good man, Amir.
Well, this has been a wild ride right here.
Yeah. I've never traded this. I will never trade it. I know I'm supposed to be a income mercenary, but I hate this company.
Well, Jack, you talked about, betting on the jockey, not on the horse. You
Yeah.
know, we look at stocks as kind of the horses, and the jockey got taken out and shot, literally, quite literally, in New York.
About to put them out to pasture.
And so now they're looking for a new jockey to ride this horse. And so far,
It's messed up. I mean, it's internally a disaster. It just hasn't all come out yet. But I wouldn't want to be assigned this stock ever. I wouldn't want to touch it. What happened with the guy that shot him? Did
he's
he
still on trial, I think.
it
Still,
take so long? They got it on video. We can try him the next day. You don't need to wait 6 months.
well, he's got the rights, the rights to defend himself and to do discovery, and it's this beautiful country we live in. So, um, yeah,
Yeah.
you could, yeah, if I was gonna sell a naked put, me personally, I would be down here at 220, 230. That's a long way down, but that's where I feel like the support is right now. We didn't quite touch it. And as Jack said, there's things that haven't come out yet necessarily. Now, if we complete the head and shoulders pattern, technically we could make a run up here to 400, but that still doesn't negate going down for a
Oh,
lower low again. We've got a downtrend.
Warren Buffett bought UNH. He also bought Oxy and a bunch of other
Yeah,
junk.
yeah, Oxy. Let's look at how well that's been working out for Warren here. He started buying up here, and he bought more here, and he bought more here, and he bought
He's
more
gonna be
here.
dead before this thing gets into the green.
That's a downtrend.
Yeah,
Hate to tell you, and it could very easily come down here to 20.
easy. But he loves the business. Doesn't care about the stock price. He thinks the stock price will catch up to how great of a business he thinks this is. He loves this business. He loves this jockey. This lady runs his.
So, I mean, he sees there's value here, but I like to make money, and the way I make money is on uptrends. I'm a trend pullback continuation trader. Jack's a credit trader. Our powers combine. We kind of find this synergy between us, and we make money. So, yeah, you got to be careful just chasing big names that can sit in stuff he's got enough money. He can sit in this and remain insolvent for a long time. Um,
Not much of a trader. But
yeah,
I'll
he's
tell
not
you
a
what,
trader at all. He's an investor. And this, there's a difference between trading and investing. And, investing, you can invest and you buy low and buy low. And eventually, when this
you
thing
know,
pops, you sell high.
one of Warren's favorite strategies that nobody has ever talked about that I've heard. I read this, looked it up myself. Take a guess what his favorite strategy. Type it in, folks. What's Warren Buffett's favorite strategy? Or if you know, what's Warren Buffett's little secret? All right, nobody knows. Naked puts. That's right. There we go. Naked puts. Naked puts. Okay, good. Never sell, Sharky says. No, Linda's right. John Grieber's right. So he started with Coca-Cola or I don't know, maybe Hormel Foods, but he did this in Coke. He sold like the 33s when it was at 39 or something like that, and just kept killing it to where he got his cost basis in Coke down to around $3 now, which is why he won't sell Coke.
Yeah, I heard it was back here, and he kept selling down here, and eventually bought a bunch, and then kept selling the puts down here.
Yep, kept selling them, kept selling them, kept selling them, kept selling them. Man, did he make money? I wrote it down somewhere, but I over $1 billion. And
And
that's
now
why
it's
he won't
way
sell
up here.
because his cost is like $3, right? Yeah, Pete, we're gonna do I'm gonna do a live meeting in 2 weeks on Cash Flow Agent. All next week. Nothing happened to me. I'm okay. I'm just taking a week off. My health is fine. Yeah, no, I'm all good. Nothing ever happens to me health wise.
Jack, the team told me this is gonna be your first vacation that they remember. So
First vacation on memory. Yeah, I know. So normally I don't take any time off because I take a lot of time off during the week, but I got a special motorcycle trip I'm going on, and it's going to take me about a week round trip. So that's that. And then we'll
yeah.
get right back into it in 2 weeks.
Wait, well, Jack, you and I have a lot in common. I took a vacation just happenstance right after I became a guru in 2021 and haven't had another one since. So um,
What'd you do on your vacation?
I went down to Edisto Island, which is a island kind of south of Charleston, north of Savannah, south of Charleston, and we were just rented a beach house there and hung out. I actually, since I just become a guru, I actually did some webinars straight from the kitchen table there at the beach house. But
Now,
that's the last time I took time
why,
off.
why wouldn't you take more time off every 2 years? What's
Me personally, I like to provide the service to the members, and every day the market's doing something, so I'm here every day doing
I
what I
know.
love to do.
I love it. That's the other thing is I love what I do. I don't, when my dad, I remember I was a kid, he worked in the steel mill in Gary, Indiana. And when he got a vacation, man, he was well due for the vacation, right? Just to not go to the mill and kill himself every day. But for me, I just do a little typing on the computer. This ain't really work. So, I love what I do and I love helping people. So I don't really feel like I need the time off like some people do. But
Yeah.
yeah,
And I love doing this. I love coming on here, talking to everybody, teaching you something about the markets, helping you make money out, take money away from the market makers and put it in your pocket. And that's just kind of what I love to do. So
yeah.
sounds
The
like
only,
Jack and I are in the same pod here.
yeah, the only time I take a real vacation is like an elk hunting trip where there's no cell phone. This motorcycle trip there down by Telluride off road, there's no cell service. So something like that, I got to take the time off if I'm going to be in the mountains or on a float trip for 5 days. Did that on the Colorado River, something like that, an adventure trip. I'm out of the market. But if it's just a couple days off, I'm still looking at the market.
Now, Jack, I asked some AI to come up with a list of high beta stocks that are quality that potentially could go up in this market.
What's AI?
And and one of them it came up with was Applied Materials that's been beat down. Now, that one might go further down. So I'm not actually going to trade that one right now.
What AI did you use?
I used one called Manus, and
Manus?
we could, yeah, it's right here. It's an agent. I don't use any of the popular ones. I use this one right here. I actually asked it, to find this for me. And so it came up with Lamb Research, Beta 1.67, came up with KKR, and it came up with some reasons. Lamb Research had strong Q3 results, 49% gross margins. It's a direct beneficiary of the AI semiconductor boom, and it raised its 2025 equipment spending outlook to 105 billion. So we can go look at that one really quickly. LRCX. And it's just below breaking out here. If it actually breaks out, that's when I'll probably be more interested in it. But it actually has my signature pattern complete here on the weekly chart with the entry triggered right here. This is my, my bounce pattern. This was the entry right above here. The target is now 124 right here. With it's actually got a 1.7 beta on here today.
That's nice.
So this one, might be one if you were interested in something, the $101. You might be interested in this. It does have earnings coming up out here in October. So got a little ways before earnings. We can take a look at the options really quickly. Just out to next week. Let's take a look, see what we got. You could get a couple bucks downside protection for a reasonable amount here. You get paid $90 for a 99. Be $2 down below current price.
I like it.
So that was one pick right here. Another pick that the AI came up with was KKR. It's saying it has fee-related earnings of 23% in Q1 2025, 664 billion in assets under management, and it's well-positioned a private equity. This is a private equity investing type company. So a lot of times Jack and I don't give a flying flip what they do as long as they can perform.
Most of the
And
time,
again,
I want to know what they do because I'll talk myself out of it. I don't want to know what they do.
So this one, a private equity investment on TradingView, the beta is almost 2. So really juicy. Almost 2. And we have the signature pattern on the weekly chart.
There it is.
So that gives me an upside 188 right there. And you could sell something down here around possibly 130 if you could get the premium. Let's go take a look. Look at the options. Jump out a week. I like to play about a week out because then it doesn't tie up my money a long time. Actually, maybe a little more aggressive up here around say 140. You get $120. Give you a $3 downside. 139, get you $90 for $4 downside. It's not bad. Not bad. So there's some options.
Tomorrow I'd take this trade.
And Applied Materials, I didn't like the chart, but it did pick that as a potential to go higher. I don't necessarily agree right now, but when the technical pattern on the chart agrees, then I'll be more apt to get involved in that one. So that was on my radar to watch. But I did take the Urban Outfitters trade. Now, this signature pattern, Jack, that I was talking about, we kind of talked about that earlier in the week for anybody that missed on Wednesday, but it plays out on all time frames. And for some people that don't want to be tied to the market every day, all day long, I actually run a service on a 1-minute time frame that takes advantage of 0-day options.
Which are smoking hot if you don't know, folks.
And you can see the last trade that actually fired off was right here, Thursday, yesterday at 2 o'clock, and it worked out by 3 o'clock.
Man,
right there.
Is that your normal time frame for the trade? Is intraday, same day?
Yep. For this particular edition, I actually created this algorithm to run on multiple time frames, and I've found that the 3 indexes, SPY, QQQ, and IWM, produce a very high win rate. And when I say very high win rate, take a look down here at the bottom, 83% profitable trades with a profit factor of 1.45 on the last 66 trades right there.
So you got good data in it didn't happen one time, it happened 66 times. You got great data in profitable trade percentage. When you got a win rate like that, you're going to be fine. And a profit factor for every dollar you put in, you bring $1.45 out. All those stats right there look great.
Now I'm going to pull all the way back to 2000, the beginning of 2000. That gives us almost 5,000 trades with the same win rate. So is this an anomaly of just the last few months? No, this goes back all the way to 2000, basically modern trading times, this century.
Great. So you just do that on how many stocks?
Right now, SPY, QQQ, and IWM, the 3 stocks that have 0-day options.
Wow.
These are trades that you can get into and out of on average less than an hour, about 45 minutes on average.
Wow.
Now the standard deviation to get 99% of the trades, it runs it up to about 3 hours. Is the kind of the 99% of the trades last less than 3 hours.